Hey traders, it's Ryan from leprivatebanker.com. Just going to do a quick recap for crude oil today and just explain what I was looking at into this week's open, and obviously just looking at some stuff heading into the new year now. I mean, we've got one trading day left of so we've got 2 trading days left of the year now. We've got Tuesday and Wednesday, and obviously we're heading into 2015. So just going to run some thoughts on what's going on in this market currently. So I mean, before I've been on vacation. I just got back and just getting back into trading, and obviously we've just seen, since I went away, we've just seen this current balancing range that was already developing. I mean, we'd already touched base on the fact that we hit that higher time frame macro support area, and there was potential balanced two-way trade coming back into the market with basically high time frame value catching up with price. I mean, we've just traded so quickly down. The sellers kind of exhausted themselves, and the market just needed to catch its breath. I mean, when we see these trending type moves, especially with the fast liquidation that we've seen, the market sometimes just needs to catch its breath. And like I said, we did hit that key higher time frame macro support, which was the lower balance from 2009. I mean, I went over this before I went away, so just to refresh your memory, we'll just take a quick look at this, I guess, and just looking at the monthly. I mean, this was the balance area that came in into crude before we see that sell-off, that huge liquidation in 2008, and heading into 2009 we just see this balance area develop. So we see this 1, 2, 3, 4, 5. We see this 5-month balance area develop, and then we finally broke out. And since we broke out of that balance area, we formed the uptrend that we've seen, and then we formed this large balance range, and now we've seen this huge liquidation and breakout of this upper balance range. So this upper balance range is going to be a very key higher time frame macro reference area, and to look at pushing forward. Obviously not at the moment, but head into next year when we finally do see another balance area form, and we do come back and revisit these prices, because there is not without a doubt that crude's not going to come back to $100 a barrel next year, and if not next year, then the year after. I mean, we're gonna see $100 a barrel eventually. So again, just have to play things. But again, we hit that high time frame key support area, and we just paused here, and we're just letting value catch up with price. I mean, we're very, very out of balance. I mean, on the yearly, we've been trading outside of that second standard deviation for since October now. I mean, we broke it in October, and we've been trading outside the second standard deviation, so we're well out of value. I mean, we're well out of balance, and we've just seen this huge breakout liquidation, and it's almost a crash. I mean, obviously it is when the market has crashed, so it's just a major reset for crude oil and what's been going on with the global economy. And I mean, I've already ran through this. I've been posting a lot of information on the forum for you guys to look at and research. I mean, I'm not gonna I've explained everything that's happened. So anyway, going back to what we're looking at here. So I mean, you can see this month we've seen an imbalance to the sell side, and we saw this sharp knee-jerk reaction down off of the month, and we were out of balance for a good part of the month, and we sort of broke that 1.5 standard deviation, and we see this balance area come into play that we've come in. I mean, even though we've seen the balance area come in, we've still seen a skew to the sell side. I mean, even though these weak hand buyers have been coming in, and we're seeing some liquidation from shorts, we've just seen this balance area form. But again, we've seen selling from the developing values. So I mean, it's just clear here, every time we come back into value, there's responsive sellers, more responsive sellers, and obviously as value catches up with price, and we've clearly seen obviously fair prices here now. I mean, $56 a barrel is a key area here. I mean, we're seeing this is a fair value area at the minute. I mean, we're obviously going to see two things happen now. We're gonna break down, and we're gonna establish a new search for value until we see new two-way trade, or we're going to possibly see mean reversions back to this $56 a barrel, and obviously heading into next year now, whatever low we print on the year is going to be a very, very important reference that needs to be watched very carefully. But obviously just heading, I'm just going to focus on what we saw today and the developments of what we've seen here. I mean, I've seen a lot of people trying to bottom pick, and I see a lot of people trying to buy this bottom, looking for, I don't know what they're trying to do. I mean, the target areas, if you're a buyer, I mean, $57 a barrel, possibly up to this 58.50 area. But I mean, we've got clear excess here, and we're still in a very strong macro downtrend, and we have seen a decent balance area come into play now. But I mean, I wouldn't be trying to be a buyer here. It makes no sense to be a buyer just yet, and that has just not come to play yet. I mean, we're still one time framing on the weekly, and we're still one time framing on the monthly, and we are clearly still finding these lower prices as a fair value because of the volume that's been coming into the market here. But again, heading into this week, I mean, just quite a predictable move today. I mean, didn't sort of expect it maybe to print a new low today, but I mean, looking the way things were going off of the open, it was rather predictable in the end. I mean, off of the open this morning, I mean, I was already sort of pointing out that we just want to be looking to fade any potential extremes, and we want to go with a breakout. I mean, we didn't really trade higher. I mean, we opened above into the point of control and just into the volume point of control from last week, and if we do merge this together, I mean, we're trading below this volume point of control from this merged 2-week distribution, and we have a very decent distribution formed here now. I mean, you can see the volume has been building lower. I mean, there's been no interest in these higher prices. So also last week was an inside week from the previous week, so we all know how to tackle this and the expectations, and we basically just want to trade with any breakout of balance here, and the market off of the open, the intentions were clear. I mean, off the open we see selling, and we just one time frame the whole day down, and as soon as we started just to see this auction and no buying interest into this low excess area from the previous week, I mean, we just broke out. We broke out when we traded and found sellers below $55 a barrel. There was no buying, so it's very obvious to me just to trade with the breakout of balance, and there was obviously an accumulation of stops down here. I mean, we had that Globex low that was untouched at this 53.60 from this day where the market had been capped, and we see this large balance area come into play. So all that happens here is there's obviously shorts liquidating, and there's weak hand retail buyers coming into the market here. They're trying to pick bottoms, and the fear of missing a buying opportunity and getting suckered into these lower prices, and all that happens is it just creates liquidity for the professional traders to come down, run their stops, and buy with the selling power that they produce in the market from their stops. It's just a self-evolution of how the markets operate. So again, I mean, we've seen the 5 exponential move in average catch up with price. We've seen the 10 exponential move in average catch up with price, and again, this is quite important as well. On this compression day, we see an outside day and we saw an outside day, gap up day. We auctioned all the way through, and we took out the low. I mean, when we take out the high and low of a bar, there's normally quite it's providing good information that something's going to happen, because no one's dominating, and anybody who was long here, they got stopped out, and anyone who was long from these 2 days also got stopped out on that day. So there is some clear inventory that's been cleared out of the market from this bar. We already know the path of least resistance is to the downside. The trend is down, and again we see this compression last week, and we wanted to trade with any breakout of balance here, which I noted this morning on Twitter and on a couple of other social media that I post to. But I mean, these are the current value tracking composites that I'm looking at, and we had this sort of crazy rebalance that came into the market, and it's just these volatility days here, and this was basically where the market came in, and we see rollover. I mean, there's obviously liquidation from shorts, and they came back in and re-established the shorts, just rolling over their positions to the new contract, and then since then we had this perfect distribution form. You can see how symmetrical it is with a skew to the downside. I mean, there was more volume put into the lower distribution. There was an upper distribution. There was no buying up here. I mean, there was this lip at this 57.16, but other than that, the main distribution balance was formed, and fair prices were being traded at 55.60. And again, we came in today, and what we didn't find buyers, we didn't auction down and find a buyer and look for rotations back up to value with further balance. We see clear selling context into the market. The tone of the market was to the sell side, and they just came in and just one time frame down, and it just got worse and worse and worse, and they started to hit some stops. Then once them stops got hit, it just triggered a big selling vacuum down, and all of the stops got run from all the weak hand buyers, and all of the professionals were just there cleaning up, getting out of their short-term trades from the market makers and the guys that actually know what they're going on in this market. I mean, very, very clear here. I mean, if we look at the footprint chart, and once we see this move down, I mean, just you can just see all the targets getting hit. I mean, this was the move down. It started to happen here, and we just see this big flush down. There was some resting sort of buy orders on the tape here, but I mean, a majority of the targets got filled into this area from sort of 53.92 down to, you can see just all of the resting buy orders coming in as these guys are getting filled in the market. So, and obviously this is all on behalf of the weak hand buyers that are providing the liquidity with their sell stops. I mean, their sell stops are getting triggered, and the professionals are cleaning up, buying their sell stops from their liquidation. So it's just an interesting phenomenon that happens in the market now, But that's just basically what I saw today. I mean, like I said, the path of least resistance was to the sell side, and very, very, very calculated move we've seen today. I mean, we came in and we tested that 1.5 standard, the top of the bottom of the developing value, and there was also that clear sort of VPARC at this 55.90. I mean, if we'd seen buyers here step in overnight and we came back into value and we started to see interest into this 56.50 area, then it would have been possible to see a pullback and buying back to this half standard deviation, but we didn't. We see a pullback to the developing value. There was a responsive seller there, and so I just need to get this right. Always probably confuse people with this because I don't. We see initiative selling. I mean, we were trading below value, so there was initiative sellers active below value here. So I mean, they were initiative selling here from the bottom of the developing value area here. And we just seen a very, very calculated rotation from that first standard deviation to this month's 1.5 standard deviation, and we did put a new year low in on the continuous contract here. I mean, if we do look at the weekly here, I mean, we formed that value inside value from that previous week, and we see that tight balance coming to the market, and off of the open we just rejected this 2 week balance, and we started to auction away from it. So again, I mean, Jim Dalton goes over this a lot in his books, and on market auction theory. I mean, he will trade. He will go with any breakout of balance in a market through any time frame. So any breakout of balance, he will try to go with the breakout of balance, because that is where the power is in the market. So, and very, very clear what happened today, and it ended up working out very nice. I mean, I believe we see an over a 200. We saw a 270 tick range here. I mean, we one time frame down. I mean, a majority of the day, and into the J and K period, we broke that one time frame. But I mean, very, very nice move down here, and again, like I said, just very, very calculated, just that half standard deviation on the week. So we've taken out that low now. I mean, we've got a decent low now in the Globex into this. I mean, what was the pit low today? So 52.90. So we sort of halted at this $53 dollars a barrel for the moment, which interesting. So we'll just have to see how we continue to play here. I mean, like I said, we've got 2 days left of the trading month, and then obviously we enter. So we've got 2 days left of the trading year, and we enter 2015. So the closing print on the year and the year low is going to be a very important reference in letting the market shake itself out, and what we're going to do here, whether we're going to come back in and we're going to see a two-way trade in this clearly established value area, and or whether we're going to come in and we're going to break away from this balance area and continue to search for lower prices. I mean, the current edge of the distribution bell curve on the highest macro time frame to me is $30 a barrel. So I mean, if we do continue to sell off from here, and we open gap down tomorrow and continue to find sellers, then $30 a barrel is a very, very visual target. Obviously there are some more psychological levels a lot on the way down, but $30 a barrel is still almost $25 away, so we'll have to just see what happens here. But like I said, we know how we trade auction market theory. It's market generated information. We come in, we let the market show us what it's doing, and we use our tools and analysis to help us with the trading edge. Anyway, I hope you all had a great holiday, and you're all prepared for the new year, and you've all been just trading with caution and applying the risk methodology to the markets, because we have seen some pretty decent volatility in the market, and it's quite easy to get trapped in that mindset where you're wrong and you end up holding trades or taking too big a losses, etc. And obviously on these days where we see these big ranges, I mean, if you're wrong and you're not trading with the order flow, then you are going to get chewed up pretty bad. So I hope you've all been trading well and you've had a great Christmas, and as usual, any questions, please do not hesitate to ask.